Hello, everybody. My name is Graham Elwood, and you are watching the Late Night Crypto Lounge, streaming live exclusively at rockfin.com/Graham Elwood and patreon.com/Graham Elwood. Thank you for supporting us at Patreon and Rockfin. Couldn't do the show without you. You guys are the best. This is the people's channel. Threat to Coinbase long-term. Bitcoin sinks below 22,000. We're going to get into that in a sec.
And Bitcoin whales are selling, a sign more passionate Bitcoin believers are exiting, and the downturn will slide deeper. Which is it?
It's hard to tell with Bitcoin, so it's such a speculative asset. You know, the price action is dependent on so many things. We invest our clients' money in Bitcoin and Ether exclusively, and using strategies like dollar cost averaging, tax loss harvesting, and asset allocation, you can really minimize these price impacts over time. But I would say that the number one thing that people are looking at this week is definitely the Fed meeting.
All right. So yeah, we got a big summer week for financial markets. What will happen? What are you watching for at the FOMC happening this week? There's a GDP reading as well happening on Thursday. What are wealth managers looking at?
It's going to be all eyes to see if, the Fed is going to remain as hawkish as they are. Bitcoin has been increasingly correlated to equities, specifically growth equities like in the NASDAQ market. We're seeing that it's, not really the inflation hedge that a lot of academics thought it was, and more of a risk on assets. So if we see the Fed increasing rates, they're expected to do 75 basis points. But let's say that on the off chance that they do 100, it would see a pretty shock to the Bitcoin market, and as well as the rest of the markets around the world. $20,000 has remained a really strong support level, and it has been for quite a few weeks now. And I could see us, losing that if the Fed does come out and has a more hawkish tone.
Okay, hear what he just said. This is something I've been talking about on this show. July 28th. So the Fed's going to announce something this week, and they're probably going to raise interest rates. And then July 28th, which is Thursday, is when they're going to announce the GDP watch, basically where they're going to show, because this is what is happening, the data all says this, that we've had the GDP has gone down 2 quarters in a row, and inflation over 5%. Our inflation rate is currently 9% as they report it. So based on their numbers and their metrics, they are going to announce Thursday, we are in a recession. And when that happens, as this guy's saying, I think Bitcoin's going to drop down again. Right now, it keeps hitting like $23,000 resistance. It broke out of this it was at the 19 to 20,000 range for several weeks. And the last week it broke out of it. And it's been consistently in the 21, 22. But it'll go to 23 and drop. And I think what's happening, like they said, some whales are getting out of it. And I think some people just did some short term. Some people bought it at 18 and 19. And when it popped up to 23, they went, let's pull out, let's make a little profit and get out of here. But I've shown you this, that the big money, the ruling elites, I did a video several months ago. They have been liquidating assets, stocks, equities, and crypto to hold cash, because during a recession, which we are already in, but they're going to officially announce it. When they officially announce it, then that's going to give companies the green light to go, oh, we got to do big layoffs. That's when that's going to start happening. Right? So cash is king in a recession, and they've known this. So they have liquidated all this stuff, and they're going to sit there with a bunch of cash. And when people start, can't pay their mortgage, when businesses start going, they're going to buy up homes. They're going to buy up business property. They're going to buy up anything. Like Hertz was having money trouble 2 years ago when the COVID first hit. And some company like that, Hertz or Avis or, whatever, I'm just using them as an example of why a big company would keep a lot of cash on hand. So let's say a company like Hertz says, oh, we're going belly up. And we've got whatever the number is. I'm just picking where I don't know these numbers, but I'm just picking, let's say they've got 2 million cars at all their Hertz locations in the United States. and they're facing bankruptcy or something like that. So some big company comes in and says, we'll buy it. What used to be what used to be worth, $1 billion worth of cars. Now I can buy those cars for 300 million. So we've got $300 million worth of cars, and we're going to start our own, whatever. They're going to start their own Turo company or something like that. They're waiting. They're just a bunch of sharks circling, and they've got all these cash assets, all this cash on hand to buy up. That's what happened in the housing crisis of 2008. These big management companies that are backed by big hedge funds and whatever else come in. Oh, you're facing foreclosure. You're facing a short sale. We'll buy your home for you. Cash for keys. You see those signs? Those are big management companies waiting to snatch up your home and then rent it back to you at a higher price. That's why the housing market, one of the reasons the housing market has been so high in the last 2 years, because there isn't as much inventory. Part of it is people didn't want to move. They didn't want to put stuff up for sale, but so many houses were bought up. There were 6 million foreclosures from the last housing crash in 2008, my home being one of them. Most of those were bought up by big management companies. So they've got somewhere in the neighborhood of 3, 4, 5 million homes they bought that they're renting out because there's more money in renting. That's what this guy's talking about.